and talking to students about career paths, because you never know what path you're going to be on. Just keep saying yes to opportunities that present themselves. But as soon as you're in a position and you feel confident in getting out there on your own, and that can look like a lot of different things, but I find that the majority of people have that inner desire, that entrepreneurial itch that they're going to scratch at some point in some way, or they're going to talk a lot about it and never pull the trigger. She was 34. We put together a 15-year plan, and that was a plan for our family. That was a plan across, all, fitness, faith, all different aspects, but also included finances. And it's been really neat. Just, as we're nearing the halfway mark of that 15-year plan, we've been able to check a lot of goals off the list, and it's just a really momentum building feeling and exercise. So I'd encourage people, unless you put it on paper, it's not going to happen. And you just have such a better chance of success. And it's a lot of fun. It's a lot of fun when you can check it off. So that's another little hack I've learned.
You're listening to the Millionaires Unveiled podcast, where you'll hear the stories and interviews of everyday millionaires. We'll unveil their decisions, their strategies, and their current portfolio allocation. Now to your hosts, Clark Sheffield and Jace Mattinson.
Welcome back to another episode of the Millionaires Unveiled podcast. This is episode number 270. A listener wrote in this last week asking why I didn't mention anything about our podcast anniversary, and that is correct. I did miss that. I was in Australia, New Zealand at the time, but so I guess this will be 5 years now that we're into this podcast. So great celebration. I know several of you have written in asking, lessons we've learned and all sorts of things like that. And has it changed from some of the earlier episodes that we discussed some of these things, and plan on doing probably something like that, as well as an update. Some people have asked about the host, which I did do my own, unveiling. I think that was back on episode number 161. But probably do something here at the beginning of the year, end of the year, or something to kind of wrap things up for year 5, going into year 6. So been at this for quite some time now. I was going to read a review we got to. This was from Conspiracy Guru. Deep dive. I love this podcast because there isn't any fluff. They use real numbers and people can relate to that. What good is an interview if people aren't comfortable talking about their actual finances? So appreciate that, Conspiracy Guru. That's definitely one of the great things I think that we've tried to focus on, specifically getting guests that are relatable. Now, having said that, I'm staring at episode 300 coming up here pretty soon, and throw it out there again. Love to have somebody on that's got a net worth at 300 or close to it. I guess we kind of skipped 200 really because we had Jeremy on, and Jeremy had a net worth of 300. When we talked to him initially, he was like, it's probably 300 actually. So that's fine. We'll do you for episode 200. He was gracious enough to come on. So once again, we've kind of had, I guess the big number, 100, 200. I guess we have a couple people on that have been 100, and then Jeremy at 300. So we skipped 200. But at any rate, would love to have, if you've got a super high net worth, love to have you on an interview. I think there's definitely little nuggets that we all pick up on from those that have got a different level of net worth. And the other request we've got a lot recently is people who are retired or at least of retirement age that are millionaires come on. I had some people write in that want to hear from some people that are kind of 55 plus and get a different perspective that way. So kind of what you're doing with your investments as the market's turned down just a bit, and after we've had quite a bull run. I guess in some case one listener was mentioning I'm 45 years old, to somebody who's almost late 50s. They've had a nice 12 to 13 year run. So get an interesting perspective on somebody who's at that age and now is seeing a little bit of their portfolio start to shrink. So at least in the market, possibly real estate too, just depends on where you are in the country. At any rate, this week we have John. He has a net worth of several million. He has a paid-for house that he's looking to refinance and take a mortgage out on, which is an interesting discussion with him. He has quite a bit in the market and investments in franchises along with crypto and some other small holdings, including some gold and silver in the safe. A great discussion with John. He's probably the first one that we've had on that has probably a significant portion of his net worth in franchise operations, and he's also a franchise consultant by day. It's kind of his day job now. So great interview with John. Really looking forward to it. Last week we had JJ, works in the private sector but has a tech background. Net worth was $1.1 million, which about half of that was in retirement accounts. He also had about $300,000 in a brokerage and another $300K in rental real estate equity. So without any further delay, let's get into the episode with John.
John, do you want to just give us a little about your background and what you're up to now?
Yeah, absolutely, Jace. Thanks for having me on. Love the show. So I'm John Austinson here in Atlanta, Georgia, and I focus in an area I call non-food franchises, which is this wide array of industries outside of food, areas that are really attracting a lot of entrepreneurs. And I myself have invested in quite a few opportunities. But I live here in Atlanta. I've got 3 young kids, beautiful wife, and I've had a solid career to date, going across a number of different industries, and I'm happy to dig into that.
Awesome. And what is your net worth today?
Several million.
Awesome. And can you give our listeners just roughly, how do you break down your net worth?
So I'm in the process of refinancing our home. Currently, we do not have a mortgage on it. And so it will change in the next few weeks. Hopefully, we'll all be able to deploy some more cash. But no, today, roughly 50% of my net worth is tied up in our primary residence. We recently went through a big renovation and, it came in a little north of $2 million in the valuation. So I figure it's time to take a mortgage and get some leverage on it. Outside of the primary residence, stock market composes about 35% of my net worth. And then that is further broken down by retirement accounts and non-retirement accounts, i.e. brokerage accounts. And roughly 50% is in retirement, whether it be IRAs, old 401ks, both Roth and traditional IRAs as well. And then the other half would be in brokerage accounts with my advisor. He manages all things on the public side. And then beyond that, I've got about 5% in private equity investments, 2% in hard gold and silver coins that I keep in a safe. I love the feel of those. I've got 1% that is in crypto, and I'm looking to expand that methodically over time. And then about 7% sitting in cash today, and that will temporarily expand as I deploy cash after the refinance.
Awesome. And then you also have some small business ownership too?
I do. So I left those out of the total net worth there, but no, I'm invested as a minority partner in quite a few franchise operations. For the most part, we've got good people running those for us. I'm typically partnered up with a few others. So not active day to day in those, but that is an alternative asset that I see.
Awesome. And we want to get into a little bit of that because that is pretty unique. But I want to ask you, so you've got a paid off house. How long did it take you to pay that off, or did you buy it in cash?
So we bought it in cash. It was in a desirable neighborhood in Buckhead here in Atlanta, and we had to offer against a few other folks, and so it made sense to offer in cash. We'd come off another home in which we'd made about $700,000 in equity. It had some nice appreciation. We'd done some fixing up over time, and so we're able to deploy that into this home. But no, we went through about an 18-month construction process with this. Took a 1930s home and gutted it, added on to it, and really invested in it. Unfortunately, the appraisal did come out, a good bit higher than what we put into it, which is always nice when you put a lot of sweat and equity into something. So currently, we bought it without a mortgage.
And you mentioned you're going to go refi that, put some cash in the bank. What do you plan on doing with that cash?
So a couple of things. Part of it I will hand off to my advisor that, he does a good job of keeping me sane and not letting me make impulse decisions. For instance, the stock market's been up great the past 2 days. I likely would have pulled out last week given some negative headwinds I saw out there. So, for me, I need that discipline. And so it's been great having him oversee it. And he's done a nice job. So part of it will go towards him. And then, we'll probably have about $1 million or so that we'll pull out that we'll be able to deploy into more private lending, as well as some crypto funds that I've got some friends involved in. So I want to be wise not to put it all in one place, but I want to be methodical and really use leverage. I mean, that's a big piece of my strategy going forward. I want to be conservative, but at the same time, I want to be wise around leverage. Nothing beats the mortgage rate you can get out there, except for really one other area, and that's portfolio loans. So my advisor right now has a setup through Schwab. I'm able to tap into and borrow against my portfolio up to 50% of its value at a 1% loan. And that's could go up over time. It's a variable rate. However, even if it goes up a little bit, when you see inflation, I'm essentially getting paid to take money out of my account if I can find a opportunity to deploy it somewhere else.
Do you do those portfolios often?
So this will be the first time that I've done it. I've looked at doing it in the past, and my advisor wanted me to get to a certain level before he wanted me to go out on margin. But right now, I plan on playing it pretty safe with a good bit of what I pull out there. There's what I see as an arbitrage opportunity where I can get a 6 to 8% pretty much guaranteed return. You tie up your money, but it's a fixed sort of investment over the long term. And so if I can borrow at 1 or 2%, flip it immediately into a 6 to 8%, it's a no-brainer.
And you said you're going to do up to 50% of your portfolio value?
Correct. So don't have to liquidate any assets. I'm not pulling anything out, but I can borrow up to 50% on margin.
Yep. So let's talk a little bit about crypto real quick, because that is something that's come up a lot. I think it's been a big thing over the last year or so. Why are you going to deploy more into crypto, and what's kind of your thought process as it relates to crypto? And is there particular ones that you like more than others?
Yeah, I don't play an expert even on TV when it comes to crypto. And so right now I'm in Coinbase, Bitcoin, Algo, and Ethereum. Heard a economist recently, a very well-respected gentleman in his 60s, that said he has pretty much doubled down on Ethereum. That's where all of his assets are. He's out of the public markets. And that was pretty eye-opening to me. It was at a conference with some other business owners and some thought leaders, and to hear him say that. So I'm still in that investigative phase. Outside of those investments I have today, it's probably 60 or 70,000 that I have in crypto. There are some backdoor opportunities through some people I know into crypto funds that have had just an amazing track record. Now, would I ever put anything into crypto that I can't see myself, potentially losing 100%? No, I'm going to play conservative, but I definitely want to have that exposure within my portfolio.
So, John, before we get into the franchises, where did this all start? Or where did your career start? And maybe back up and kind of give us a little bit of a journey of how John's evolved.
Yeah, absolutely. So, grew up, my father was an attorney and, really smart guy, but he was always worked for himself and did a lot of pro bono work for people in our church and elsewhere, very admirable, but he never struck it big and financially. And so he put three of my siblings, myself, through private school. However, then I was on my own to pay for college and really, take off after that. And so we're now in a position where we're actually helping our parents out some in hindsight. But no, after the University of Georgia, I went to work for Accenture, got to do some neat things internationally just from a consulting standpoint. Went back to grad school, and I loved going back and talking to students about career paths, because you never know what path you're going to be on. Just keep saying yes to opportunities that present themselves. And for me, that took me to India, came back to grad school, ended up going to work for Carter's Oshkosh B'gosh, based here in Atlanta, and never thought I'd be in the children's apparel industry, but worked with clients like Costco and Macy's and other large retailers out there. And we sold hundreds of millions every year in baby clothes to these retailers, but got to work for the president and do some neat things within the company. And they were always very good to me, allowed me to take on additional responsibility over time. And I'd say that's where my wealth building really began. They were very kind in paying above market salaries, and then very generous matches when it came to 401ks and with bonuses and with profit sharing. And I was able to get into the equity program at a very early stage. And as a result, as their stock price went up over time and I had restricted shares and options, that really created a snowball effect where that vesting every year really started adding up. So, it probably came to close to 400 to 500,000 that I was able to pull in, towards the latter time of my time there. But like so many others, I had that desire to do something a little more entrepreneurial. And so we'll go down that path in a minute of what I did on the franchise side and through business ownership. But I'd say that corporate experience, just, being able to save and, I made a few real estate investments. Some were good, some were not. Back in the '08 crash, I bought some raw land shortly before that, a few pieces with a partner. And, last year we ended up selling those for literally pennies on the dollar. And, and so those did not work out. They kind of were offset by a couple of rental properties I had. I had two different rentals that appreciated in value, also cash flowed. And I'm a big believer in single family homes, renting those out. Last year, I was at the point where I wasn't large enough to hire a property manager to manage my two house portfolio, but at the same time, I didn't want to continue doing the repairs myself were, getting those tenant phone calls. So we ended up selling those this past year, and those offset the losses on the other side. But no, big believer in real estate. Our last two primary residences, we've been able to tax free, make some really good equity advances off of those.
So at what point did you start getting interested or have this entrepreneurial bug, or did you always have it from the beginning?
Oh, from the beginning. And what I find, I talk to enough people around the country that, so many people have this desire to build their own kingdom and empire instead of building someone else's. And I think it's a good idea to get that experience out there working for someone else. But as soon as you're in a position and you feel confident in getting out there on your own, and that can look like a lot of different things, but I find that the majority of people have that inner desire, that entrepreneurial itch that they're going to scratch at some point in some way, or they're going to talk a lot about it and never pull the trigger.
So what made you finally pull that trigger?
Yeah, so I'm 42 now. I think I was 36 at the time. And I wanted to get with a smaller private company. To me, leaving the public company world, that was the first step. Long story short, ended up with Shelf Genie franchise system, had the opportunity to come in and serve as their president, based here in Atlanta, but we had franchisees all around North America. Shelf Genie is custom pull-out shelving for kitchens and pantries. So I had the opportunity to lead their marketing teams, the call center and technology team, and really support all these small business owners, and it really opened up my eyes to this world of non-food franchises. There are a lot of different paths out there to making money that are maybe a little more risk averse and predictable than if you were to just go out there and start on your own. So that led me to really falling in love with franchising, with business ownership. And from there, ended up partnering with the founder. We spun off. We bought it into a few franchises as investments ourselves. And now I get the opportunity as a broker and consultant to spend most of my time working with people all around the country, helping to take them through a pretty streamlined process and introduce them to a handful of vetted brands that we feel really strongly about, and helping them kind of every step of the way.
Interesting. So as you've made that transition and now you have a lot more of a focus right on non-food, is that correct?
That's correct. And, so many of your listeners will have different industries that they're in. The more you can niche down, the better. And that's what I've done is I've kind of created a category because when people think franchising, oftentimes they think fast food. And so I call what I do non-food franchising.
So just for our listeners, what would that entail? Maybe, are we talking about cleaning companies, or what does that look like, non-food franchises?
Maybe if I just share a few examples of some recent deals. So today I had a client, a former Wall Street attorney outside of Boston, buy a gutter business. Never thought he'd be in the gutter business, but there's a lot of money to be made in there. And so I had a couple this past Friday that worked for the University of Arkansas out in Fayetteville, Arkansas, and they wanted a side hustle. They bought it's a fitness concept for those 50 and over that don't like the big box gym. It's a smaller footprint. It's great technology. So they got really excited about that, running it as what we call semi-absentee on the side. I had a client recently buy into a roll-off dumpster business, and he was already a business owner, had a few different businesses, and felt that this would be a good complement. I've got a client in Atlanta that has a real estate brokerage, and he's buying into a property management franchise that he feels would be a good complement. I'd say right now, if I had to find what we're seeing out there, non-sexy is the new sexy. People love things that are like essential services. You mentioned the cleaning business. They love things that are understandable, that are somewhat Amazon resistant, maybe COVID resistant. I just did a 10-pack oil change deal a couple of weeks ago, and they use prefabricated buildings and unused parking spaces of retailers. And so it's things like that. They're a little unique. The Serve Pro model, things that are essential, will always be there. People love those. But we still, do some neat ones, that they're a different take, whether it be car washes or laundromats, stuff like that. So we're seeing more interest in franchising than we ever have before. I mean, our placements year to date are almost double what they were last year, which was almost double what they were the year before. And I really think COVID's causing a lot of people to step out and say, maybe now's the time to make a move and scratch that itch. Maybe the path I need to be on is something with a little more control and flexibility and be my own boss and build my own empire instead of someone else's. So it's a lot of fun to be out there right now. It's also really competitive. A lot of the great brands are going really fast in good markets. So I try to keep a good pulse on what's coming down the chute from an emerging brand standpoint, and then jump on those and introduce them to my clients.
So, just high level, what does it look like for these service-based franchises? Revenue, profit potential? Can they really be run semi-passive, or is this somebody that's going to take an active, role in the day-to-day?
Mm-hmm. I'd say about half of my clients are looking to do it semi-passive, where they keep their day job and maybe they hire a general manager to run the business. Of course, it comes down to having the right general manager. I mean, ultimately people matter. The other half of running them is owner operator. And, I'd say on the low end, you can get into a lot of these services businesses for right around $100,000, including the franchise fee, some startup cost. This would be a non-brick and mortar, like you mentioned, cleaning, pool cleaning, let's say, or home cleaning, or carpet cleaning, or roofing, or gutters, insulation. Those kind of businesses you can get in for as little as 100,000, maybe 125. And from there, oftentimes by the second year they're doing 500,000 or so in revenue, oftentimes at a 20 to 30% operating margin end of the day after you paid all your expenses. And so the strategy there is to buy a couple of territories, and maybe you launch with one and then you open up the next one 6 months down the road, next 1 year down the road. So you're able to scale up that one business. Other clients of mine like the idea of having multiple businesses. The client that I just did the oil change business with, they're also buying into a driveway business. They're also actually franchising their flooring business. And so franchising can be a great path to scale an existing business, and we see more and more companies realizing that it makes a lot of sense to bring in owners around the country to help you build it out and create that relationship. So anyway, those are a couple of thoughts, but I'd say by and large it is eye-opening to people when they understand the returns you can make. I mean, some of the businesses that we work with have margins as high as 40 to 50%. And that's end of the day. It's not gross margin. I'm talking about what are you putting in your pocket. And so when you're making 40% on a $1 million business and you're all in on the business with 200,000, you do the math, the returns are unbeatable. Now, nothing is easy. It's not set and forget. You still have to be somewhat involved, but the potential is definitely there.
Yeah, you being a real estate investor, have invested in real estate, or maybe is probably the better way to explain it. How does somebody kind of correlate? It's real easy. Somebody goes, hey, I got a single family house. I understand it. Maybe bridge the gap for our listeners a little bit on how somebody who maybe is investing in real estate or even in the stock market, how do they think about investing in a franchise, these small businesses?
Yeah, no, I call franchising an asset class, and I give a talk to investors oftentimes where it's, hey, stock market's up here, interest rates down here, only so many good real estate deals to be had. Where else are you going to invest outside of, let's say, crypto and baseball cards? With business ownership, it does open up the potential to not just build cash flows, but, to build an asset that should have appreciation. But also you're able to write off a lot of expenses. And so oftentimes that's overlooked. So it's kind of a three-edge prong there. But more than half of my clients are real estate investors. A lot of them have single family homes or multifamily or a little bit of commercial. And so for them, it's understanding, hey, let's diversify a little bit further. And, nothing's easy. It does take some time. But when you buy into a franchise versus just going out and starting from scratch, some of the benefits that I see are, one, you've got that franchisor on the sidelines, almost acting as a coach, very aligned interests. The better you do, the better he does. He's providing that support and that coaching along the way. You've got the playbook. You're not having to start from scratch of figuring out, can this make money? It can make money. It's just, what is that fastest path? So you're really on third base rather than starting on first base, if you will. You've got other franchisees around the country that, have maybe tested different marketing vehicles or, figure out where the best hiring pools are that you can tap into. And so you're able to glean from those insights, as well as, going in, that if you run it halfway decent, what kind of return should you get? Every franchise system has what's called an FDD, or franchise disclosure document. Within that, there's an item 19 section which breaks out the financial performance of other franchise owners in the system. So you get to understand, going in eyes wide open, what is that potential? You also get to talk to other owners prior to signing the agreement. So the goal is for you to have as much information before making that decision as possible. So it definitely increases your likelihood of success.
Yeah. How does one go about selecting maybe the right one for them, or even exploring these options?
Yeah, great question. It can be a little overwhelming. Within the U.S. alone, there's over 4,000 franchise systems, and with these franchise systems, once you take out the food-related ones, I'd say we're down to probably half of them. Just call them 2,000. And for me, I'm affiliated with the Franchise Consulting Company. It's one of the largest brokerages in the U.S., and so we have vetted collectively over 300 franchise brands that we have selected to partner with that we feel really strongly about, and we're proud to introduce to our clients. So that includes the leadership teams, the financial model, the unique within their niche. So we've done a lot of that legwork for you already. We also see what's going on behind the scenes. We know, you may go to a brand's website and see 5 locations. Well, I could tell you on the back end that 80 more locations are opening in the next 6 months. It's that kind of information that I'm able to tap into. Additionally, what we've done is really streamline the process. And so first off, the process is entirely free for all my clients. I get paid by the franchisors. None of that gets passed on to my clients. It's just a sales and marketing expense for them. So it's a great model from my standpoint. But no, when I engage with a client, I get to know them, have a couple of calls, have them fill out some information, and then I'll present them with opportunities that could be a good match for them. What do I see resonating with other people around the country with similar backgrounds to themselves, with a similar interest in the day-to-day involvement, and what is that financial return they're looking for? Do they like large teams or small teams within their market? Where are the needs? Once we start peeling back this onion, it's a lot of fun for me in the matchmaking process, because say over 85-90% of my clients end up in an industry they never thought they would be in, but it makes a lot of sense. And so we have a lot of fun going through looking at different opportunities together. But the goal is to do the vetting for you and to do the streamlining of the process so that we can then present you with 5, 6, 7 opportunities in your market that are available that could be a good fit for you.
Interesting. So in terms of your personal, journey with franchises, and, you still got some market investments in your house, how do you look at your investments on a go-forward basis? Where did each dollar flowing into? How much are you putting still in the market, real estate, franchises, et cetera?
Yeah, so I'm a member of the Entrepreneurs Organization, and I've got a great group in our forum, and we've been talking a lot about this. What does it look like? How do we go from trading time for money? And it's a conversation I have with a lot of my clients. Everyone is looking for a more passive way to build wealth over time, especially once you get into your 40s. The earlier you can start, the better. And so for me, that's one lens through which I see things, is what will take the least amount of effort. How do I diversify? And I've really been studying up on inflation and kind of where we're going. I believe federal governments and central banks are probably the 2 most powerful forces out there. And so how do I align with the fact that they're probably going to continue printing money because they've got so much debt they need to get out of it? And so I am a big fan of real estate. I'd say to shore up where I am today, I'd like to get a few more real estate properties going forward, cash flowing. So I'm looking at some up in the mountains right now that I really like, as well as some here in Atlanta in good neighborhoods. But so many people are looking at those right now. And so I'm trying to differentiate a little bit, maybe go with the $600,000, $700,000 homes that can rent out for a little bit more, because everyone else is looking at the 200, 300 today. And so I feel like that's somewhat saturated. And so that would be one avenue. But no, I'm going to continue to, hand off several $100,000, every year to my advisor, let him put it to work. That's just been a proven methodology over time. Don't bet against the stock market long term. And I'm looking to use leverage in a bigger way, like I talked about. Getting the mortgage, getting the loan, because with inflation is obviously that silent tax. It reduces the value of assets, but it also reduces the value of debt. So if you're able to take out debt and never do anything beyond control and beyond your means, but over time, those fixed payments are worth a whole lot less, and they're a lot easier to make over time. So I think that's something that people are starting to catch on to, is the use of leverage to fight inflation. But no, I'm going to continue diversifying. I do think having the silver coins and gold coins in the safe, I'll continue to build that up, probably buy a little more ammo for a rainy day. So just make sure that it's well-rounded. And a big focus for me, my oldest child is 10 years old. I want to start teaching that financial literacy to him. Greenlight's got a great card out there today. So I'm going to incorporate that. That's a big goal for next year, is to kind of educate him as well on how to invest and put off today's pleasures for tomorrow's gain.
Awesome. Okay, so you talked a little bit about teaching that next generation and Greenlight. Are there things that you've done in your family to kind of start that process already?
I think, it's easy for me to say a lot to my kids, but they catch what you don't say, and they can, and so my son sees me working hard every day. I think that's ingrained in him. He sees me, meeting with my advisor, talking about different franchises that I'm investing in. He's helped me fix up some real estate properties in the past. So I think a lot of that just exposure to him that, hey, this is how we do things. When I grew up, oftentimes we were living paycheck to paycheck. So the money conversations that my parents had, for me, I said, hey, I want to have it different. I want my wife and I to have different conversations in the future. And we've been fortunate that we've set ourselves up to have different conversations. But I think that's healthy. But I do try to share with him that we need to be very grateful for what we have, and that it wasn't just given to us. I had to work for every dollar that I ever made. Nothing was handed off. And so instilling work ethic and some of those values, I think, are the biggest thing. And then, I am having a lot of fun with him right now. He's in an investment club at school. First time he's been exposed to the stock market. So he's come home with some questions. I love answering those. So
that's awesome.
I've tried pushing him a little more in the past. Yeah. And now I'm letting, when the student's ready, the teacher will show up.
How long have you been working with your financial advisor?
Yeah, so with this advisor, just over a year now. So I've had two different advisors prior to this over time. And, my tendency has been to start thinking that I was smarter. I'd gone to business school and I nerd out on researching tax strategies and everything. I just enjoy that. And so I start thinking that I'm smarter than my advisor, and then I'll pull out. With this one, this guy definitely is, has an impressive resume. I was lucky to be able to get in with him. Typically works with clients with a higher net worth than myself. So I'm in it with him for the long run, I think.
And how do you compensate him?
Yes, he gets a percentage of the overall portfolio. So it's entirely fiduciary.
And that's annually?
He takes out quarterly.
Quarterly? Okay.
Yep.
Cool. So John, let's wrap up here with some rapid fire questions. What is the most expensive meal out you've ever paid for?
I think $750, and it was a small group of maybe 5 of us, and so it ended up being fairly high. So nothing too extravagant, but right around that ballpark.
What's been the coolest experience that you've had, or that you've taken your family on, in regards to a trip, and how much did it cost?
Yeah, so with COVID, the last couple of years, we've had to hang a little tight domestically, but I've traveled more so with just some friends of mine. But my wife and I went to Greece years ago, and we still look back at a few of those days. Those were our best days ever. Just perfect days. I can't wait to take my kids to Europe and just start exposing them to the world. That's one of my big goals going forward is to do a lot of travel.
Do you know roughly what you spend on those trips?
I've always had so many points with airlines and hotels. I'd say the most expensive vacation we've ever taken is probably $4,000 or $5,000, to Maui, but looking forward to spending more in the years ahead.
Okay. What about the most expensive car you've ever purchased?
Yeah, so $40,000 Tahoe, 2 years old. I only buy used. I don't invest in cars. We've got fairly up to date, Lexus sedans in a Tahoe, but they're both at least 5 or 6 years old, and we'll drive them for another 5 years. So don't try to keep up with the Joneses in that department.
When you buy used, are you looking for a certain mileage or age in the car?
Yeah, so we live in the city and we don't drive that much on an annual basis. And so we are typically I like to look at the first year of a new model. And so, the Tahoe that we bought, I think was a 2015. Well, that was the first year that they came out with the new model. And so it stays looking newer, for a longer period of time rather than dated. And so that's been one strategy that I've taken.
Interesting. And you buy it at 2 years old or 3 years old, or?
Yeah, typically 2 to 3 years old.
Awesome. Do your friends know of your wealth and family?
My friends don't. They know the home that we live in, which can help them kind of back into, at least the overall level that we're in. My family knows that we've done well, but they don't know probably as well as we have done. There is so my forum within the Entrepreneurs Organization, 7 other guys, I opened up to them. We all shared our numbers recently for the first time, where we really got into our net worth and what our investment strategy is. And that was freeing in a way. I'd had some success, and just to kind of hear what other people's number and what their goal was. Neat exercise my wife and I went through about 6 years ago when we were 35. She was 34. We put together a 15-year plan, and that was a plan for our family. That was a plan across, all, fitness, faith, all different aspects, but also included finances. And it's been really neat just, as we're nearing the halfway mark of that 15-year plan, we've been able to check a lot of goals off the list. And it's just a really momentum building feeling and exercise. So I'd encourage people, unless you put it on paper, it's not going to happen. And you just have such a better chance of success. And it's a lot of fun. It's a lot of fun when you can check it off. So that's another little hack I've learned.
Do you review that frequently?
Not frequently. I'd say at least once a year, my wife and I will go through the 15-year plan. But then for myself, I also nerd out on goal setting. And so, I'll have my annual plan that I break into quarters. And a lot of that comes down to my income for the year that I like to break out and compete against myself. But, I'm in that phase of the year right now when I'm thinking about January. And so I'm excited to get after the goal setting again.
What was your GPA in high school or college, or both?
Yeah, I was always a 3.9 student. So found time to have fun, but also kept it focused in the classroom.
How much TV do you watch a week?
Very little. So I love college football, my Georgia Bulldogs. So I'll watch every Georgia football game, and then I'll catch some other games. But oftentimes it's with the laptop open, and my wife and I'll flip on Netflix, and neither of us will really watch. We just sometimes like having the noise in the background. So very little. There are really no sitcoms that we follow. There's no mindless TV. I'll turn YouTube on and listen to the news in the background from time to time. But most of what I listen to when it comes to podcasts, I'd say that's where I consume a lot of information is podcast and audiobooks. A lot of it is around investing and small business ownership. And a lot of that serves as both education and motivation for me.
Do you read a lot of books a year?
I do, but the majority of the books are consumed, while I'm driving or out exercising. Audio. Yeah,
it's interesting. We've heard that so much more lately that it's just we've come such to this digital world, and it's so much easier when you're driving or working out or whatever to consume that stuff. Kind of kills two birds with one stone in a way.
Absolutely.
So, in terms of this 15-year plan, what's the big goal for you out there that you're still working towards?
Yeah, so my number, and I'll just be candid here, is 12 million. I want to have 12 million in net worth, and I've kind of broken it down as to how much of that, will be invested in assets that can kick off, an annual return for me that I pull out from, live off of, and then a portion that will, be in there for the long term, really building that inheritance for my kids over time. So it was really interesting when I talked with other business owners. Quite a few of them had numbers right around that 12 million mark too, which, we can live off less. I mean, absolutely. But that's the goal. I'd say over the next, 7 to 10 years is to land there, and over time start trimming back the hours that I work. Right now I feel like I've got great flexibility in my schedule, but look to increase that over time and do a lot more pro bono work. I coach my kids' sports teams and volunteer in different capacities, but I want to be able to do more of that as a percentage of my time. So I'd say others that are like-minded to myself, we're laser focused on time versus money right now, and making that trade-off. And I think the older you get, the more you realize you can always make more money. You can't always get more time. So while the kids are young, I just don't want to ever look back and have regrets at not spending time with them.
Do you know roughly how much you spend a year?
Yeah, we're probably in the 175 ballpark. When we first got married, we tracked spending very closely. We're in a position now where it's not a good use of my time to track it as long as we keep it within, under control. I mean, I use QuickBooks. I know what's going on, but I know we're not looking at things under a microscope. Instead, using that energy to focus on the top line. If we can keep the top line revenue moving, it's going to take care of everything.
What do you splurge on, or do you splurge on anything in your opinion?
Yeah. Splurge for me might be going out and getting a massage after a stressful week. That's a small splurge. But no, we like to travel, and we do like to get out and have dinners. But our biggest splurge is what we did with our house. I mean, we put in the pool and the turf, the artificial turf in the back, and it really took a few, did the gas line to the fire pit, just little things that, that do add up. But we're going to get all the use out of those, and they're going to go towards making memories. And I'm sitting in my carriage house office right now, and that was a splurge too, just the way that we finished it out. So we invest in things that I think will have a residual value over time. Something that's newer for me is art. I'm starting to get into art. That's never been on my radar, but recognizing that that's another investment class and it's something that we can enjoy. We do a lot of hospitality and hosting in our home. And so we're starting to get into art. We're very much novices at this time. And one other thing that, I wouldn't call this a splurge, but it is a path that's important to us that we're moving down is being able to give and, being a good steward of what we've been given. And, I'm a big fan of donor advised funds. Just started using one myself about 2 years ago where you can contribute appreciated stock into an account like with Schwab in this case. And, we've got about 100,000 in there, and we'll give out, at least half of that every year, and hopefully build that up over time. But with the donor advised fund, it just allows you very easily to make gifts of assets to charitable organizations, and you can time your contributions to the tax years where it makes the most sense. And so, big fan of that. If anyone hasn't looked into it, I'd encourage.
Once again, that's John Ostenson, net worth over $1 million. Appreciate you coming on the show today.
Great, thanks so much for having me.
Thanks for listening to the Millionaires Unveiled podcast with Clark Sheffield and Chase Mattinson. For more stories, investment opportunities, and information, check out our website at millionairesunveiled.com. See you next time when you'll hear from another everyday millionaire.